All right, so you've decided to purchase this webinar. Kudos to you, because this is a major step. Education, no matter what you're doing, is always going to be the key to get the maximum experience. All right, so we are here. We are getting ready to dive into this home buying process. What I want you to do before we go any further, I want you to make sure you grab your pencil or pen, whatever writing utensil you choose. And I want you to make sure you have your home buying journal near you. I want you to take adequate notes and jot down any extra thoughts or questions that you may have, so that when you and I are ready and we meet in person and I have our one-on-one consultation, you have all those notes and questions for me, and I'll be ready to answer everything. All right, so go ahead, make sure you have your writing utensil and make sure you have your home buying journal, and we are ready to go. I have all of my stuff situated. I'm going to be looking at my notes because I want to make sure I give you everything I have to prepare you for this process. The first thing I want to talk to you about is creating your budget. I'm going to explain that a bit further. However, what I want you to understand is that when I pair you with a lender, or whenever you select your lender, they're going to give you an amount that you're pre-approved for. However, the amount that they say you're pre-approved for to carry your monthly mortgage and the amount that you set for yourself, they may not be in alignment with one another. And that's okay, because what we're going to do right now is you're going to pause this video and you're going to write down all of your expenses, and you're going to establish what number will you be comfortable paying every single month. Not what number can you squeeze and is tight for you, but you can still pay it. No, you shouldn't experience that type of discomfort. That's not what homeownership is about. It is about what number can you afford comfortably while still being able to live your life, have entertainment expense, and do things with your family. Okay, we don't want you to be what they call house poor. So what you're gonna do is you're gonna pause this video, write down all your expenses on your expenses page, and come up with what number you're gonna feel comfortable paying every single month. All right, so now that we've talked about establishing your budget and what number you'll be comfortable paying every month, we are going to start talking about how to choose the right realtor, and also why using a realtor is beneficial for you and why it's the smartest and best decision for you as well. So first and foremost, when you're selecting your realtor, aka me, you want to make sure that they are full-time. Throughout this process, you are going to have tons of questions, and those questions don't have a time mark on them. You're not going to all of a sudden say, oh, I have to talk to Ashley at 5 p.m. You may want to ask me a question at noon. You may have a house that you want to see at 11 a.m. However, we want to make sure that that realtor is full-time and available to you. So because I pride myself on providing such great customer service to my clients, I do want to assure you that I am full-time and your needs are my needs. Also, you want to choose the right realtor also because of most realtors have a preferred list of service providers. And the reason they have a preferred list is because that means that they have vetted these service providers, and that means they are prepared to do the best possible job for you as well. So the more parties that we have that are on the same page and ready and willing to make your needs our needs and your needs their needs, that's going to be an amazing experience for you. So leading into that, choosing your lender. Every lender is not the same, and every lending or financial institution does not offer the same type of lending product. So if you know that you are wanting to for sure have down payment assistance as part of your loan package, well, then you want to make sure that the lender that you are selecting offers a down payment assistance package, right? What that looks like for you is your realtor will ask you tons of questions, and we get personal. We get to know one another very well. One of those questions may be, how much money do you have right now? Because that lets us know how hard we need to negotiate for you. We want to make sure we set the expectation for you right from the jump. So that may be a question, and just be prepared to ask it. Again, this is a reminder. There is no judgment in this. This is just us becoming familiar with one another, and I am becoming familiar with your profile as an individual, okay? When you're choosing your lender, one thing you want to do also is make sure you are able to get in touch with your lender. So maybe you were referred to another lender through a friend and you're calling this lender and they're not answering the phone. That's a sign right there that you may not be able to be in good communication with your lender throughout this process, which is not a good thing, because it is common practice for the lender and the realtor to be in constant communication with one another. So you as their client, if you can't get in touch with them, that doesn't mean that I'll be able to get in touch with them. And then that causes problems later on down the line, because once we go under contract with the property, what that looks like is there are dates embedded within that contract. And if your lender does not meet those dates in that contract, it can essentially cost you money. So my best advice to you is talk to your realtor, AKA myself, and say, do you have a preferred lender that you work with? And then we will direct you to one of those lenders. The reason that you want to speak with the lender is because you want to obtain your pre-approval. Your pre-approval is basically telling you your buying power. How much money is this financial institution trusting you with? You want to know that because that's going to guide your search. So your pre-approval in connection with your budget that you set for yourself should be one in one, or they should guide your search, so to say. Because let's say you may be approved to spend $2,000 a month, but maybe your budget is $1,500 a month. That's okay. At least we know your budget and we know what you can afford. What we don't want to happen is, let's say you start going out and you're searching for homes and you see a house that's maybe having an open house, and you go in and you fall in absolute love with this house, and then you find out you can't afford it. So you've gotten emotionally attached to this house. A lot of times when you go in a house and you fall in love with it, what happens is you start picturing yourself living in that house. You start saying, oh my God, my office could be right here. You say, I can put my couch right here. These are the decorations for my kitchen. And you start planning it as if you're living in that house. And it becomes an emotional process. And then your heart is broken a little bit when the lender says, okay, that's not going to be the number in which you're approved for. And because we know that this is such an emotional process, what you're going to want to do is make sure you are pre-approved before you start the process of actively searching for homes. So sometimes, and maybe you've done it yourself, you'll call and say, hi, I just want you to show me the house, and then I'll see if I want to do an application. Unfortunately, it's not how it works, because for one, this is business. It's business for you. It's business for me. It's business for the lender. So I myself, I don't want to set you up for failure and take you to a house that I know you can't afford. So what we'll do is you'll say, hey, I want to see a house. And I'll say, okay, absolutely. I would love to get you out for that house. But how about I connect you with a preferred lender, give you a few lender suggestions, and then you choose them, you do your application, give them all the documents that they request from you, and then they give you your pre-approval, and then we start looking at houses. Because part of being pre-approved in the home buying process is being prepared. So for example, let's say you didn't have your pre-approval yet, and I scheduled a showing for you, and you fell in love with the home once we got there. However, that seller may have received other offers in the meantime, and you say, you know what? Hey, I want to put an offer in on that house as well. Well, you can put your offer in, but if you don't have a pre-approval letter to correspond with your offer, it's just an offer. How does the seller know that you're serious? How does the seller know that you've taken the time to connect with the lender to understand your buying power? So at that point, the seller, the listing agent, they aren't even going to take your offer into consideration because you're not ready. So again, being prepared is going to allow you to have the best possible experience. And then also another important piece that I want to kind of conclude this section with is look up the reviews. You can look up my reviews on har.com, and you can look up the reviews of your lender. You want to make sure that other people have had a great experience. Look up our reviews. And that will also give you more security to let you know that you are working with a reputable lender and realtor. All right. So also, while we're in this section and we're discussing the initial home buying process, here are some additional things that I would like for you to take into consideration. What do you want in a house? How many bedrooms do you need? Because that's important. You can't say, oh, as long as it has 3 bedrooms, but then, you have children and then you have extra family members planning to live with you, and, life changes. So understanding how many bedrooms do you need? What type of square footage do you want? How many bathrooms do you need in your home? What area, what side of town do you want to live in? What is most important to you as you're selecting a home? If you know that you spend majority of your time in your backyard, maybe a large backyard is a big deal for you, but you need to make a list of what you absolutely want. What are your non-negotiables that you are going to have in this home? And that's going to help you with your search as well. It's going to prevent you and me from going to homes and it's like, oh, this one's not going to work. It's not enough bedrooms. This one's not going to work. It's not enough bathrooms. It's not going to work because the square footage is too small. So understanding what you need in a home is going to be a critical aspect to your home search. And then also, how soon are you wanting to move? Do you want to move immediately, as in the next from now to 3 months? Are you wanting to move 3 to 6 months, 6 to 12 months? Because that matters when it's time for you to actually start looking at homes. So for example, if you are not planning to move until the next 12 months, right now is not the time where you and I need to go into homes and physically start looking, because what's going to happen is those homes that are available now probably won't be available in the next year. So you have to establish your time frame. When do you want to move? Are you in a lease? Will you have to pay to get out of your lease if you break your lease? All of those things matter and help you establish your time frame. Also, some things that you want to do. So let's say you are preparing to move the next 12 months, or anytime you're preparing to move. What you want to do is kind of have a good idea of where your credit score stands. Yes, of course, I'm going to introduce you to several professionals who will help you, but you still want to have an idea, because generally most programs now, especially if you're wanting down payment assistance, they want you to have a 620 or above credit score. Some lenders may say a 640 or above. Some lenders may say 580, but there's going to be stipulations with that. So what you need to understand also is, where are you credit wise? Now, I know a lot of people say, oh, I looked on Credit Karma. Credit Karma is definitely not the best place to get an accurate depiction of your credit score. What I would say Credit Karma is good for is telling you the type of things that are on your credit. Maybe what kind of debt is on there right now. What kind of credit lines do you have open? But they are not the most dependable place to get your credit score. And while we're on that, I know a lot of people are like, well, I don't want my credit score ran. I don't want the lender to run my credit score because it's going to ding my credit. It will not. If a lender running your credit one time will put you in the position of not being able to purchase a home, then honestly, you probably weren't ready at that time anyway. So what's going to happen is the lender is going to have to do a hard inquiry on your credit, because they have to get a full depiction of your credit portfolio. They need to know, what is your debt to income ratio? What is your credit score? And those are things that the lender has to pull for themselves. They can't just go off word of mouth. The worst thing and the worst experience is a lender giving you a pre-approval without looking at any of your documents. That has caused so many problems for buyers in the past. They say, oh, well, I was just online and I filled out a quick pre-approve, apply now button, and it said I was approved for $200,000. And then the lender is like, wait a minute. From what I see with your income and your debt to income ratio, this is not accurate. They did not give you an accurate number. So nothing would be worse if you get a letter from a lender who never really looked at your profile and collected documents from you, giving you a pre-approval. We go under contract with a home. In the midst of being under contract, they say, oh, I'm sorry, I gave you a wrong approval amount. You're not really approved for that. Just imagine how crushed you are. because you are now attached to this home. So what I will say to you is, if at any given point you are online and you hit the apply now button and it says, oh, you're pre-approved, that is not the most trustworthy source of determining what you're approved for. That process, you getting pre-approved, looks like this. You completed a loan application with the lender. Once you complete the loan application with the lender will request documents from you, such as previous year's tax returns, W-2s, or 1099 forms if you're 1099. They're going to request all of these things from you. They cannot give you the most accurate number until they have these documents. I'm going to say this again because this is important. The lender cannot give you the best depiction or the best trustworthy amount of what you are approved for until you give them the documents that they have requested. So you can say, oh, I filled out the application. And it's like, yes, you filled out the application. But, you know, in the meantime, the lender is doing employment verification. They have to make sure you still have your job and the amount that you said that you make and you put in your loan application matches your paycheck stubs. So they can't verify a lot of this information until you give them the paperwork that they need. So what I see so often is people say, I did the loan application. They need to tell me how much I'm approved for. No, you did the loan application. They requested documents from you. You need to give them those documents. Allow them time to go through those documents to tell you how much you're pre-approved for. Again, you must give your lender the documents so they can give you the accurate number. So some things to also note is that lenders check your debt to income ratio. They check how much debt you have. So if you are a person and you use credit cards a lot, you want to keep that debt utilization extremely low, 10% or less. That's ideal for most lenders because you want to make sure that once you get to that lender, you in the best possible position to be able to get approved for what you are wanting. Now, there are some situations where a lender says, hey, I'm looking at your credit portfolio and I'm looking at your debt to income ratio and I'm looking at all sorts of things. And they may say, you're not ready right now, today. However, they may give you a list of items that you can do or things that you can pay off or some suggestions on maybe opening up new lines of credit or getting secure cards. Listen to what they're saying. You don't have to get discouraged as in, oh, I'm not ready, I'll never buy a house. Listen to what they're saying. They're giving you great advice and great information. So follow what they tell you to do. Don't go do extra, do exactly what they tell you to do. Because chances are they have run your information through what's called a simulator. And that simulator is taking, if this person pays their credit card down to this number, it will get them to approximately this credit score. So what they're telling you to do is things to get your credit where it needs to be, to get you the best possible interest rate and to get you approved for what you want to be approved for. These are all things that are going to be typical and you're going to experience as you're in the process of purchasing a loan. All right. I'm going to pair you with different lenders. However, here are some questions that you may want to ask your lender. What is the interest rate? They may say, well, I can't tell you that right now. I have to look at your credit profile. And then based on your credit profile, then I can tell you what the interest rate would be that would be applicable to you. I know a lot of times people are like, well, my cousin got this interest rate. My aunt bought a home and this was her interest rate. Every single person's credit portfolio is different. Yours is not identical to your cousin's, so your home buying process may not be identical to your cousin's. So that is something to keep in mind. This is your home buying process and only yours. So everything that we discuss is applicable to you. Okay. So I know a lot of times people are like, well, I want this interest rate. You won't know that right off the bat until you've given the lender everything. How much money do I need to put down? So generally what this looks like is your closing costs were generally 3 to 5% of the cost of the sales price of the home, and your down payment is 3 to 5% of the sales price of the home. So a lot of people get confused and they're like, oh, my closing costs, and they're the same thing. And they are not. So when you say, what are my closing costs, and they're 3 to 5% of the home, your closing cost is something that once the lender gives you that number, we can ask the seller to maybe contribute a little money to those closing costs. Again, every seller is different. And sellers have their own closing costs that they have to pay. So it doesn't necessarily mean that they're going to give you the amount of closing costs that you're asking, or even any closing costs at all. I want to say that again, because I know on HGTV, they make it seem like the seller has to pay all your closing costs. No, that is a very unrealistic expectation. However, it's common to ask the seller to pay for closing costs. That's perfectly fine. I'm always gonna negotiate my best ability to get you the best deal possible. Please keep that in mind. No matter what we do, I'm always going to negotiate to the best of my ability to get you the best deal as possible. And then you have your down payment. Your down payment is generally 3 to 5% of your closing costs. The seller cannot contribute to your down payment. The seller cannot contribute to your down payment. You have to come up with your down payment, or you can utilize a down payment assistance program. Both these closing costs and this down payment number is the number that you will actually bring to the table, the estimated number that you will actually bring to the table and that you will need to close on your home. Okay, so I've given you a lot of information. Take some time right now. Jot some questions down, rewind to parts that maybe you need some clarity. Again, write those questions down so that when you and I meet, I can answer even more questions for you. All right, get ready for section 2. All right, so video 1, we discussed some of the preliminary things that you do prior to actually actively going out and searching for a home. So after you do all of those things, you select your realtor, you speak with your lender, get your pre-approval, you set your budget. Now we are ready to actually go out and look for homes. So we go out, we look for homes. We find the one that you are head over heels for, the one that you have fallen so in love with that you're like, I gotta have it. What do you do next? So that's what we're gonna get into. So what you do is what is called putting in an offer. In this offer, basically what you do is you are telling the owner and the listing agent what you want to pay for this home, when you want to close on this home. You're going to ask for whatever closing cost number you want to ask for. Seller concessions, such as like if you want them to pay for a home warranty for you, if you want them to pay the title policy, what type of financing you're going to use. All of those things are written in the offer. So you write your offer up, right? Once you put in your offer, the seller can do 3 things. They can accept it as is if they think you've written a beautiful offer and nothing needs to be changed. They can reject it if they feel like your offer was offensive and insulting, or they can counter. So what it means to counter an offer means that they like some of your terms, but not all of them. So for example, let's say you told the seller you wanted to give them $10,000 less than sales price on their home, and you want them to pay all of your closing costs. They may say, no, I'll pay half of your closing costs if you give me a full price offer. And maybe they can say, I don't want to close in 30 days. I want to close in 45 days. All of those things are things that happens when you counter. So it's basically like they like some of your offer, but not all of it. Simply rejecting an offer, a seller can say no and just leave it at that. One common misconception is that a seller has to provide a counter offer. They do not. A seller can simply look at your offer, feel that it's insulting, feel that you may be a difficult client to work with, and say, no, thank you. And that's it. They said no. However, that doesn't always happen, but it can happen. So I want you to be prepared. So as you're putting in offers and you're falling in love with these homes, let's not make the mistake of just throwing out an offer, offering the seller, $50,000 less when, the market says that it can sell for what it's sold for. Okay, so a seller can accept your offer as it is, meaning they liked all your terms. They will sign, your signature is already on the offer, their signature is on the offer, the realtor will execute it, and now it's a contract. They can reject it and simply say no. If they reject it, simply say no and they don't give you a counter. You also have the option of starting over and just revising your offer and submitting a brand new offer. Or again, they can counter. Now, when the seller gives you a counter offer, you have those same options. You can accept it, you can reject it, or you can counter. So a lot of times there will be a few counter offers on each party coming from the buyer and selling side until both parties are able to meet in the middle. Again, the counter offer it can multiple times until both people can meet in the middle, right? So that's what happens whenever you put in the offer. The seller can accept it, reject it, or counter it. So let's say now both parties have countered and we've come to terms. Once you've already signed the offer, the owners have signed the offer, the listing agent will execute the contract, meaning they will put a date and time on it. We are now under contract. That is no longer an offer. We are now under contract. So what happens when you're under contract? First things first, you're going to need to deposit your earnest money. When you look at your contract that we will review together, it states that the earnest money is due within 3 days of that contract being executed. So the contract is executed on the 1st, you have the 2nd, the 3rd, and the 4th day of the month. So let's say if it's executed on the 1st day of the month, you have the 2nd, the 3rd, and the 4th. And on that 4th day, by 5 p.m., your earnest money is due to the title company. Your earnest money is a deposit. That is the deposit that you pay and you deliver to the title company. This shows that you are serious about this home. So this deposit shows that you are serious about the home, and it also is an additional layer of protection for the seller in the event that you do something that defaults on the loan. Your earnest money is generally 1% of the sales price of the home. So if you purchase a home and it's $200,000, your earnest money will be $2,000 because that is 1% of the sales price of the home that you are purchasing it. Again, that is 1%. So a lot of people are like, okay, I'm turning in this earnest money, and then what happens to it? So this earnest money is held at the title company, and you will be credited with your final number. So whatever number that the lender tells you, you're gonna deduct that number by the 2,000 because you'll get that'll be credited towards your closing costs. So that number isn't just a deposit that vanishes. It is applied to your closing costs or to the total number that you'll have to bring to the closing table on closing day. So you've turned in your earnest money. After you turn in your earnest money, in your contract, it also generally states that you would like an option period. And that option period is going to cost you a fee. So the option period is basically a time frame that is agreed upon in the contract that establishes a termination clause. So for example, typically it's about a 7 to 10 day option period, and it can cost anywhere from maybe $100, $200, $300. On average, I see about $100 to $200. And so what you do is, let's say you have a 7-day option period. It's very self-explanatory. That means you have 7 days, and in those 7 days, you have the option to move forward with the home or the option to not move forward with the home. In your option period, in that 7-day option period, what's going to happen is you're going to get an inspection. And once we get to that point, I send you a list of my preferred inspectors. You're going to schedule an inspection with one of those inspectors or of your own if you have one. But you're going to schedule an inspection. It must take place within this option period. Again, at this point in this option period, time is really of the essence, and we want to be smart about our time, and we want to get the inspection done and completed as soon as possible. So once you have your inspection, the inspector goes in and they are performing a complete composite report of the home. They want to make sure that this home is not just pretty, but it's sound. So they're going to be checking for the plumbing. They're going to be checking the roof. They're going to be checking electrical components. They're going to be checking every detail throughout this home to make sure that what you are getting is in good condition and it's not just pretty. Again, the inspector is not a roofer. They are not a foundation specialist. They are not an electrician. They are not a plumber. However, they are qualified to go through and determine if these different aspects and components of the home are functioning properly. Just let's kind of recap. You've put your offer in. You all, the buyer and the seller, have come to terms. We've executed our contract. We've taken our earnest money to the title company. We are now in our option period, which is generally 7 to 10 days. So your option period is when you get your inspection completed. And also in that option period, you deliver your option fee to the seller. So you take that $100 or whatever the term and number that was agreed upon in your contract, you're going to deliver that money to the seller, or you're going to take it to your agent and your agent will deliver it to the seller. You want that option period. Of course, it's not mandatory, but it's highly recommended because it allows you time to do your due diligence on the property. It allows you that time to really take time to study what you're buying to make sure that you're making a sound investment. Again, this is going to be probably one of the largest purchases that you make. So you want to make sure that if you're going to put your money into this, that it is in great condition. So you're going to get that inspection report back. Inspection reports can be a little bit intimidating to look at because sometimes they are 20, 30, 40 pages. It's not saying that there's 20, 30, 40 pages of things being wrong. However, inspectors, they do their job, and it is their job to inform you of every single aspect of this home. Sometimes because the reports are they're kind of discouraging because it's just a lot and it's not always easy to understand and it can be discouraging. What I always suggest as well is to call the inspector. It's nothing wrong with getting on the phone with the inspector and saying, hey, I'm looking at this report. I don't really understand it. What is wrong with this? What is wrong with that? Can you please help me to better understand what's going on with this home that I'm purchasing? And 9 times out of 10, they will get on the phone and say, no, that's common. It's just, I have to disclose that to you. Here are the major things that I see. This thing is cosmetic. This is a simple fix, all of those things, right? After speaking with the inspector and kind of reviewing the report with them, the next step is requesting repairs. And so when you request repairs, it's not common for you to say, oh, this is a 30-page report. I want everything fixed in this home. That is not a common request or realistic request when you are purchasing a resale home. Remember, you're purchasing something that is not brand new. And even on brand new homes, these inspection reports can still come out to be quite lengthy. So once you get the inspection report, what I primarily focus on is not necessarily so much, little cosmetic paint here, paint there. I want to focus on making sure that, things that will be a big expense to you after you've closed on the home, that we focus on asking the seller to repair those items. So for instance, let's say the dishwasher wasn't working. Okay, we want to request them to fix that because that is something that should be working. Let's say the AC wasn't cooling properly. Well, we're going to ask them to employ a licensed HVAC professional to come in and diagnose it and fix it, make the repair, because those repairs can be costly. So we don't want to say, oh, it's no problem. The expectation that the seller will fix every single thing on that inspection report is not realistic. They will not, especially since some of things will just be very minor, paint chip here, paint chip there. So our focus is to make sure we go through the list and focus on mainly those items that will be a major expense to you to fix once you move into the home. We're requesting repairs, so we're still requesting these repairs within our option period, because our option period ends on the time and day that was specified in the contract. So it's usually on the 7th or 10th day before 5 p.m. So we want to get this inspection report done as early as possible in the option period to allow us time to have the inspector come out, complete his report. We request repairs, and maybe some of those repairs, once we turn it into the listing agent and the seller, they may say, okay, before we agree and say, yes, we'll fix all these things, we want to get some quotes so we know exactly what we're working with. And so that may take a day or two. So that's why it's important to get all of this done as early as possible in the option period, because they may not allow us to extend the option period past the day that was agreed upon in the contract. They may, and if they do, generally it's another fee associated with that. However, ideally, we don't want to have to go back to them and say, hey, can we have another extra day, a few more days? Because what will happen is, let's say our deadline is that 7th day at 5 p.m. At 5:02, if the sellers have not signed off and you all have not come to an agreement on the repairs, they are not obliged to make any repairs. And then let's say, there were some big items and it was never agreed upon. Well, then you would be at the risk of losing your earnest money if you wanted to terminate the contract at that point. So it's always my job. I have never had a client to lose earnest money, and I don't ever plan on it, because I make sure we get that inspection done as early as possible and we get those repair requests in early as possible. And I try to leave that last day where we've already gotten all that agreed upon and established, so there's no stress and no pressure on either party's end. So after that option period is completed, what happens next is the lender will order the appraisal and the title company will order the survey. Now, the reason we do not order the appraisal prior to the option period ending is because what if something comes up on the inspection report that completely turns you off from wanting to buy the home and you want to cancel out you want to terminate the contract? Well, if you terminate the contract, as long as you terminate the contract in your option period, you can get your earnest money back. So that 1% of the sales price of the home, you get that money back because you terminated within the option period that was agreed upon in our contract. If you want to terminate based on something that was found in the option period, let's say on that 8th day, and we agreed to a 7-day option period, you are not, the likelihood of the seller giving you your money back is slim to none, because now you're defaulting on what we agreed upon in our contract. What will happen is, after this option period is over, you will order your appraisal. After the option period is over and it's decided that you will be moving forward with the home, then we go ahead and I tell the lender, hey, we made it out of the option period. Let's go ahead and order the appraisal. The appraisal, sometimes that fee, the lender will require you to pay that fee up front. It's generally between $500 and $550. However, that is a fee that generally is applied up front. So it's an upfront closing cost and not a closing cost that's paid at the table. So you'll pay that. And again, we wait until the option period is over, because if you decide that you don't want that home that you're under contract with, if you decide you don't want that home in the option period, then you ordered the appraisal and you've paid for it already, and you've paid for something that you don't even need. You paid for an appraisal on a house that you're not even buying. That's why we wait until after we get out of the option period to order that appraisal. And the same with the survey. We don't want to order it prematurely, and we don't want to survey on a property that we're not purchasing. So the lender will order the appraisal, and the appraisal is literally an opinion of value. A professional appraiser is assigned to go out to the property to be sure that the home is really worth what the sales price is. So if the sales price is $200,000, the appraiser's job is to go out determine the opinion of value, and make sure it's indeed worth that $200,000 price tag that they put on it. So there's a lot of research that the appraiser does before they go out to the property. They look at homes, comparable homes that have sold in the neighborhood, generally within the last 6 months. If they can't find one that's, comparable in the last 6 months, they may go a little further out in date, or they may go a further radius out. However, that's what they use. They find comparable properties to determine the value of the home that you are purchasing. From that point, the appraiser generally gets his report in about a week and a half. So if the appraisal report comes back and the house is priced at $200,000 and it is indeed, the appraiser deems that it's worth $200,000, great, perfect. We're one step closer to closing. That's perfect. That's amazing news. Let's say the price of the home is $200,000 and it comes back at $205,000. That's even better for you, because that means you're going in with a little bit of equity, right? That doesn't mean that the seller can come back and charge you more money because the house is worth more money. That is absolutely not the case, because at that point, the seller won't even see the appraisal report. Basically, all that will happen is I will simply tell the listing agent, we met the value, and that's it. I don't disclose to them, hey, we appraised at 205. No, just simply let them know we met value and we can move forward with the process. So that's always a great thing. Now, there are situations in which an appraisal will come back lower than the sales price. And there are options here. So not to be discouraged or anything, there are different options that we have at this point. Sometimes what will happen, the first thing is, with your permission, I will get a copy of the appraisal and I will submit what's called an amendment. I want to amend our original contract. That means I want to say, hey, my buyers still want to purchase your home, but we want to purchase it at the appraised value, not the sales price. That would be the first thing. That's natural. So we'll go to the, with your permission, take the appraisal report. I'll create an amendment, meaning I'm amending or I am changing something from our original contract, and I'll submit that appraisal report and amendment to the listing agent. The listing agent will present that information to her seller. And the seller may say, yes, I get it. I understand. Maybe we were a little overpriced. That's fine. That's our best case scenario. That's what we want to happen. However, there are other options that can happen. The seller can say, no, I don't want to sell. And they can say, I know your lender is only going to finance you at the appraised amount. So if you still want to purchase this house, you need to come up with the extra money out of your pocket. However, that's generally not ideal. So at that point, if you don't have the funds and you don't want to pay the extra money out of pocket, you at that point have the option to say, I would like to terminate my contract. You can terminate your contract, get your earnest money back, and once you get your earnest money back, you're free and clear and you're done with that house, and we can continue searching for another home. However, I would like to just clarify, because sometimes people say, well, I paid for my inspection. Will I get my inspection money back? No, you won't get your inspection money back, because that inspection was paid as to provide you an ease of mind so that you were more knowledgeable about your purchase. So you will not get your inspection fee back. You will not be reimbursed that fee, nor will you be reimbursed your option fee. So at that point, if you terminate and the seller does not agree, you will get your earnest money back. You will not get the price of your inspection back, and you will also not get the option fee back. Another thing that can happen is the listing agent can challenge the appraisal. So challenge it means she can provide her own comps and support and evidence as to her reason of why the house should be worth what the sales price is. And sometimes it can happen where the appraiser will adjust the price of the home. Not all the time. However, those are three main scenarios in which what can happen after you get the appraisal done in return. The title company will be ordering the survey. The survey is basically a drawing of your whole lot. And the survey is going to outline basically your property boundaries, your property lines from your neighbors. Now, I've given you tons of information. I hope you have been taking your notes and writing your questions to ask me clarifying questions. There's going to be multiple parties. So I've already talked about the title company. I've talked about the lender, the realtor. I'm going to be in communication with all of these parties to make sure that we are on target for our close date, and just to make sure that everybody's in communication with one another and has what they need from one another to facilitate a smooth closing for you all. So that was a lot of information to digest. Pause it, rewind, rewatch, take a break, whatever you need to do, but get ready for section 3. Okay, so here we are. We are entering into the wrap-up stage. I know. I have given you so much information. I mean, I have given you a lot, and I kept that pretty simple. So again, I know that as I gave you information, you had tons and tons of questions. So what I'm hoping is that as we went through, you wrote down your questions in your home buying journal, and you wrote them down so that when you're ready to reach out to me, I am ready to receive you, and that I am ready to answer any questions that maybe I didn't answer that are specifically for you in your home buying process, because I covered a lot of general things. Okay, so this is just the final section, the final wrap up. We got through a great deal of it, and at this point, what I'm going to talk about to you is like what's happening now to the closing table. So right now, at this point in time, I just want to communicate some do's and don'ts. As you're in this home buying process, the lender is going to keep a close watch on your credit, and they're going to make sure that you have not done anything. You have not taken out any new loans. You have not acquired any new debt. You have not started spending more money on your credit cards, because all of those things can change your debt to income ratio, and they can change your loan, and it can make you not eligible to purchase this home anymore. So what I'm going to tell you is, do not take out any new loans. Do not apply for any new credit cards. Do not start spending more on your credit cards. Also, do not change jobs throughout this process, because the lender is going to do another employment verification. They may even do it up until the morning of closing. They will do another employment verification. So do not change jobs. If you have to change jobs in the midst of this process, please inform your lender and myself. The best thing to do, both if you have to change job, is to let your lender know so they can instruct you on what will now happen and tell you what documents will be needed. If you have to make a large money transfer, and I mean large as in anything over like $200, $300, let your lender know, because there is a whole entire process that needs to happen when they see large money coming into your account. They're going to want to know, where did this money come from? And you have to provide a paper trail for them, or else it cannot count as money that you can use towards your closing. So again, do not take out any additional loans. Do not start spending more on your credit cards. Do not apply for any new credit cards. Do not apply for any new lines of credit. If you have to change jobs, inform your lender. If you have to make a large money transfer, inform your lender. Constantly stay in communication with your lender and myself. And part of staying in communication with the lender and myself means that you are checking your email. Check your email. It's so many people that say, no, I didn't check my email, and you miss something. And if you miss an email from the lender that required you to turn something in within a certain amount of time, then every time you're delayed in getting those documents to the lender in the time that they requested, those are days that you're delaying your closing. And keep in mind, the seller does not have to extend your closing. Check your email every day, numerous times a day, because you're going to get emails from me. You're going to get emails from the title company. You're going to get emails from the lender and their assistants and things like that. Check your email. You're going to get emails from insurance companies. I cannot stress this enough. Check your email. You may start to feel frustrated throughout this process. because it's like, okay, I have to submit these documents to the lender. I have to go to work. They're asking me for documents at 12 o'clock. As soon as I get off work, I gotta go pick up my children. I have to go to a game, and then I still have to make sure I get these documents to the lender. It can get emotional and it can feel overwhelming, but just breathe. Remember, you're borrowing a large portion of money, and they want to make sure that all the documents that you have given them, you have been truthful, and that you have the means to pay this money back to them. So that's all it is. It's just a big, long verification process. But when you close on this house, you are going to be so happy. I mean, so happy. And I'm going to be right there with you celebrating. And it's just going to be an amazing experience. Again, there will be times where you feel discouraged and frustrated. It's okay. We're going to take a breath. We're going to regroup, and we're going to get back to it. Okay? So after your offer, after the appraisal, a lot of the next steps is you preparing to get to the closing table and the lender completing the final documents with your loan. So all of that happens. Now we are at the closing table. Before we get to the closing table, the lender and the title company will tell you how much money you need to bring. The lender and the title company will tell you the amount you need to bring to closing. When you come to closing, you will bring your state issue identification that is not expired. It cannot be expired, or even a passport. And you will also bring your cashier's check or money order for the amount that the lender and title company told you that you will need to bring to closing. So you get to closing. I would say prepare for at least an hour to be at the closing table. I would say maybe not schedule anything right after closing. Maybe if you do schedule something, be flexible with your moving date. Be flexible with anything else you kind of have planned that day in the event anything is delayed. But I would say anticipate at the bare minimum an hour at the closing table to sign all your documents at the title company. Once you sign all those documents, everything is going to be submitted to the lender for funding. So the file is not funded until the funds have been released to the seller. Basically, you have paid for the document, aka like if you were going to a grocery store and the cashier is checking you out, but until you have paid for it, the cashier has received your money, then it's not paid for. So the same concept with funding. You're going to sign the documents at the closing table at the title company. The title company will send the lender your documents and everything. And then once they've received your documents and reviewed them and processed them, they will send the file and say, congratulations, we are funded. And once we are funded, you officially are a homeowner. It sounds like such a long, arduous process, but I promise you, I make it so seamlessly smooth. So I would like to wrap that up and say, thank you so much for joining me. Thank you so much for investing in yourself and preparing yourself for the home buying journey. It's going to be a wonderful experience, and I look forward to hearing from you. Talk to you soon. Bye.